the Dig Deep the Mining podcast. And today's guest is Mark Learmonth, who's the CEO and Director of Caledonia Mining, who are a profitable, cash-generative gold producer with a strong growth profile, with their primary asset, the Blanket Mine in Zimbabwe. Mark has a finance and investment background and joined the company back in 2008, and is here to tell us today about his journey with the company, and what the company has been doing and what the future holds for them. And they've been doing some exciting things recently, which Mark will speak about. So that's welcome, Mark, to the podcast. How you doing, Mark?
I'm doing very well. Thanks for having me.
No, and I appreciate your time as well. So, as I mentioned, you've come from the finance investment background. Well, that's your background. I wonder if you can just tell us a little bit about your career, possibly before you started in mining, and then when you got into mining.
Okay, so I'm an accountant, qualified in London in the 80s. Hated it. Then I went into what was then merchant banking with a small British bank called Hambros. But then that just sort of morphed into investment banking. I ended up effectively commuting between London and Johannesburg, where I was doing a lot of work for a company called Sud Electra, which was eventually became Extrata, and I was buying a load of ferrochrome assets in South Africa, and that kind of got me the bug for mining, and also meant that in the 90s, 97, I ended up relocating from London to Johannesburg, which in 1997 wasn't a bad place to go. And clearly, if you're going to do investment banking in Johannesburg, it's going to have resources focused on it. So I stayed in Johannesburg until about 2016. Now, so I worked for a series of banks, some of which went bust because there was a secondary banking crisis in South Africa. Ended up working at Macquarie, still based in Joburg. Then finally, by the time I get into 2008, actually just before the crash, I decided that I'd had enough of investment banking. I'd had enough of helping other people grow their businesses, and I wanted to get involved in a business that was growing itself and actually get some ownership of a real honest business. And so I joined Caledonia in 2008, just before the world went crazy. At that time, Caledonia was focused on a big cobalt exploration project in Zambia, and we got one thing right in that we identified correctly that cobalt was going to be a go-go metal, but we didn't get it right in that we didn't actually find any cobalt. And so we spent a lot of money drilling. Actually, that's not true. We did find cobalt, but metallurgically it couldn't be extracted from the host ore, so that was a bit of a waste of time. And we had a rag bag of other assets as well. We had PGMs in South Africa and diamonds in Canada and Zambia. But slowly over time, we whittled that down and we focused the business on the Blanket Mine in Zimbabwe, which we bought in 2006 for $4 million. We bought it off Kinross as they were leaving the country. So that's how that's a bit of my background, and that's how I got into the mining game.
Obviously, you've mentioned that you've been you're the CEO of Caledonia Mining, and you started with the company back in 2008, and you became the CEO in 2014. Just wondering if you can tell us a little bit about your experience with the company to date, and how that you positioned you for the current role as CEO.
Well, yes, I joined as corporate development and investor relations. It was a small company at that time. At that time, the head office personnel, I think there's only about 4 of us. So it was a very, very small company. And I basically drove strategy and investor relations. And as we focused the company down onto the Blanket asset, we were then faced with quite a tough road, because the blanket mine was cash generative. It was a producing gold mine in Zimbabwe, and it had substantial investment requirements and opportunities at the mine. But it being in Zimbabwe, it meant that there was absolutely no hope for us to raise third-party external equity or debt. And so what it meant is we had to be very, very cautious and painstaking in making sure that we made the money and then we reinvested the money sensibly to make more money, which we could then invest sensibly to make more money. And you have to be, you got the normal vicissitudes of mining, stuff happens, bad stuff happens, sort of, you might have interruptions to production for whatever reason. So, or the gold price may change. And so your cash may not be quite what you expected it to be. And so you have to be very, very nimble in terms of making sure that we matched our investment requirements and our investment commitments with the cash that was coming through the door, because there was no buffer, there was no sort of safety valve, and that took up most of my time in sort of 2008, 2009, 2010, 2011, 2012. I became CFO in 2014, and the previous CFO became the chief executive. And that just meant I was more formalized in this role of managing the cash. And in 2014, late 2014, early 2015, we embarked on a really quite substantial investment program at Blanket, because frankly, we got no choice. We had to take the mine deeper. We had to dig a new shaft, going down 4,000 feet, 1,200 meters. That was going to cost what, $75 million. And if we hadn't done that project, we would have closed the mine down in probably 2019. We were just running out of material that we could access. So given the size of that project and the sort of the existential nature of that project, not completing it was not an option. We had to complete it. We had to complete it within budget, because as I say, we couldn't raise money, and we had to complete it on time, because if we didn't complete it on time, we'd run out of material and we'd close the mine down. So that was a very challenging sort of 5-year period. We were making perhaps $20-25 million a year, but we're spending about $22 million a year, and it was very careful. And I think what I learned from that exercise is the importance of really rigorous cash flow management, really close attention to investment programs, because frankly, if you don't have any, when there's not much wiggle room, you got to make sure that you can accommodate whatever unfortunate wiggles happen. So that put me and actually the rest of the management team in a really good place, in terms of you can't just go running off to the equity markets and bail yourself out with more equity if you need it, because frankly, for a Zimbabwean company, that has historically not been available.
The central shaft was a massive focus for the company over the past couple of years. This project's been obviously successfully commissioned, and Caledonia is reaping the rewards of the increased production. What would you say about the project in retrospect?
I wish we'd done it earlier, frankly, and we didn't do it earlier. I wish we'd done it earlier, because we'd have saved ourselves an awful lot of grief and heartache. But we didn't do it earlier because, frankly, the investment climate in Zimbabwe in sort of 2013, 2014 just wasn't conducive. And we left it till the absolute last minute, when we had no choice. It was either do it, or if you don't do it, close down. So we had no choice. I wish we'd done it earlier. Would have made life much easier for us. I think that what I get from that is meticulous. What the whole management team get from that is meticulous planning, close attention to actually implementation, fairly conservative financial structures around it. But I think what we really benefited from doing that project was the really high quality of the workforce in Zimbabwe. We did the whole project using our own workers and a very small crew of, I think, about eight supervisors, 8 supervisory staff who were South African. So we weren't using extremely expensive offshore contractors, and that's one of the reasons why we got the thing done so cheaply. But yeah, we've never ceased to be surprised at the quality of the workforce in Zimbabwe, who really, they're highly educated, they're very literate, they're numerate, they've got a great work ethic. And it's it's one of the reasons why we are so positive about future investment in Zimbabwe, because fundamentally at the end of the day, if you can't rely on local workers, and then you've got to start using expensive expats, it quite quickly changes the economics of the project, and also it changes, it sort of distorts this term, your social license to operate. If you got a load of workers there who aren't from the country, it does build resentment and causes problems. Every single worker at the mine, we've got 2,000 workers. Every single worker at the mine is a Zimbabwean, and our relationship with the community is excellent. And you don't need me to tell you, the difficulties that some mining companies have got in other African jurisdictions with the local community. We just cut right through that, and it's a great strength for the business.
No, it's a good result as well, having a whole local 2,000 employees that are local. So no, that's good to hear, even though I'm a expat mining recruiter. Would it be fair to say that since the successful commissioning of the central shaft, the company has shifted its focus to becoming a more multi-asset producer?
I
suppose why is this strategy important to Caledonia Mining and moving forward?
Yeah, we have changed we haven't changed our strategy. Our strategy has just evolved and developed. So let's be clear. When we were busy doing the central shaft, we didn't have the management bandwidth to look at other assets. We didn't have the money either. So, and we had to keep absolute single focus on delivering the central shaft. Central shaft is now operational. It was commissioned in March 2021, and it's now contributing to a much higher rate of production. So we put out our Q2 production numbers a couple of weeks ago. We're now running at a rate of about 80,000 ounces a year, which brings several benefits. The first is that obviously producing and selling more ounces means that you've got more revenues, but it also means that our fixed cost base gets spread over more ounces. So in general, it means that we're looking at downward pressure on our cost per ounce, in an environment that is somewhat inflationary. So we now have the benefit of more cash coming through the door, and greater sort of management bandwidth to look at other projects. So we'd always intended to look at other projects. We just didn't have the wherewithal to do it previously. And it's very important to become a multi-asset producer, because one of the investment risks that we face currently is, as a single asset operation, it means that you're much more prone to unfortunate things happening. In mining, as you'll be aware, good stuff takes 5 or 10 years to happen, and bad stuff can happen in seconds. And as a single asset operation, you've always got that sort of higher risk factor. And so it's a good thing for us to do, to try and diversify that risk by becoming a multi-asset producer. But I guess then the next question will be, okay, multi-asset producer, but why in Zimbabwe? Why don't you take your money and try and become a multi-asset producer across multiple jurisdictions, which is a fair question. We can come on and perhaps discuss that right now, if you like.
Yeah, no, carry on then.
Okay, well, I mean, there's two reasons why several reasons why we remain resolutely focused on Zimbabwe. The first is that from a gold perspective, it is highly prospective. Until the 80s, Zimbabwe was Africa's third biggest gold producer, behind Ghana and South Africa. And there's a lot of gold in Zimbabwe, and it's never been properly explored, for obvious reasons. The very poor sort of investment climate there in the 1990s and onwards. So if you ask any Africa geologist, any old African geologist, they will confirm. It's not just me as a washed-up investment banker telling you this. People who know much more about this than I do know that Zim is probably the last unexplored frontier in Africa. So there's big gold in Zimbabwe, and actually we've just bought a big asset a couple of weeks ago. Second thing is, that's where we can operate. Operating in Zimbabwe is not as hard as people might imagine, but it does require a certain sort of skill set, and it requires you to be able to sort of navigate the highways and byways and know what you're doing and which levers to pull and which buttons not to press and that sort of stuff. And actually, that's where we operate very successfully. So, given the fact we operate successfully there and it's so prospective, why on earth would we take our money somewhere else where we'd have to, effectively pay school fees to learn how to operate in a different jurisdiction? And I think the third reason why we also remain focused on Zim is that our money doesn't travel very well. We don't have huge amounts of cash, and that means that if we're to look at things in other jurisdictions, we would be having to offer our equity, and typically assets in other jurisdictions are just much more expensive than they are in Zimbabwe, and so it would be those deals would be dilutive for us, overly dilutive for our shareholders. So there's three reasons then why we remain focused on Zim. It's got the gold, it's where we can operate. But frankly, we don't really have the financial flexibility at this stage to take our money and look in other more highly sought after jurisdictions.
Yeah, obviously at the moment the world is going through a very big inflation crisis, if you would call it that. Obviously Zimbabwe has experienced that over a number of years. How has the company moved forward during that whole period of very, very, very extremely high inflation?
Well, there was the inflation reached its first peak in the period, 2008, 2009, when, you'll be familiar with millions and billions and trillions, quadrillions, quintillions, septillions.
I've got a $1 trillion note or $100 trillion note.
Yeah,
so, yeah.
And what the only people really who suffered in that environment were actually the workers. They suffered terribly. And at that time, under the laws that prevailed at the time, we had no alternative. We had to pay them in local currency, which was just worthless by the time they'd received it. And actually, in late 2008, we did close Blanket Mine down, simply because the operating environment just became completely unsustainable. But that fixed itself within a couple of months. So that was then. And then you went through a period of relative stability. But as it stands at the moment, yes, in local currency terms, there is extremely high inflation, running at, I think, about 500% per annum. But we don't operate in the local currency environment. We're a gold producer. We sell our gold for primarily dollars. We get about 75% of our revenues in US dollars. And then we spend those US dollars on our labor, our workers get paid in US dollars. The bulk of our consumables, which we import from South Africa, we pay for those in rands or effectively US dollars. And so the local currency component we use to pay taxes, duties, and a small proportion of our electricity bills. So we're not particularly affected by the local inflation rate to the extent that we would be if, say, we were a purely, say, a beer manufacturer or something making something producing for the local consumer market. So we're insulated from that. Having said that, we are now beginning to see the first signs of proper, genuine US dollar inflation. And so as every other company will be in our sector. So, we're seeing explosive prices go up, we're seeing ammonia prices go up, we're seeing steel prices go up, cyanide prices go up. But you know what, I'd much rather in an inflationary environment be a gold producer than be something else. So the clear point here is that domestic inflation in the Zim dollar just doesn't affect us at all.
You're on the verge of releasing your second sustainability report, and you're moving towards renewable energy sources. Having commissioned a solar project that will support the power delivered to your mine in a sustainable way, how is the project progressing, and are there any changes you're making for a more sustainable operation?
Yeah, that's right. We're investing $14 million to build a 12 megawatt solar project, which is immediately over the road from the mine. The project, to all intents and purposes, is pretty much ready to go. I was there a couple of weeks ago, and it's there. It's ready to go. The project was somewhat delayed by COVID, which had an effect on the manufacturing of the panels in China, and then after that there was supply chain difficulties getting the stuff from China to Africa, but we got through that now. The only delay in getting the thing commissioned is the final sort of plugging it in through the grid. And that just takes, that really comes down to some sort of historic communication issues between the contractor, Voltalia, and the local grid company. But we now understand that those communication issues have been resolved, and we expect the solar project to be operational and delivering power to the mine by the end of August, and that will deliver about 27% of Blanket's average daily power requirements, and will save us. It'll save us about $3 million a year in electricity costs, and it pays for itself. We're not doing this just to burnish our green credentials. I mean, yeah, the environmental benefit is it's not lost on us, but we're doing it because it makes money. And already now we're beginning to look at a second phase project where we could further increase the contribution from solar from 27%, which it will be at the end of phase 1, to perhaps 50%. The other thing that's worth noting as well is that of the balance that we get through the grid, a high proportion of that is actually from a hydro project itself. So if we're using the solar project to displace diesel, because we do currently use quite a lot of diesel in periods where we have power outages, where the grid's not functioning. So long as we're using solar to displace diesel, once you've done that, frankly, our green credentials and the provenance of our power is a very high proportion of solar and hydro, which is important nowadays.
Before obviously we started recording, you mentioned that you've recently made an acquisition. Just wondering if you can talk more about that.
Yeah, so as we mentioned earlier on, I mean, having got the central shaft finished, and we're now reaping the benefit of that through higher production, better cash flows. Late last year, we made our first foray. We acquired a 1 million ounce resource base for $4 million, and then we're busy doing work to upgrade that resource base, and then we'll do some further exploration on that. But then more recently, a couple of weeks ago, we announced that we've acquired a much bigger asset. It's nearly 2.5 million ounces of measured and indicated resources at a grade of about 2.25 grams a ton, and that there is a feasibility study on that project already, which caters for the building of an open pit operation producing a peak of about 200,000 ounces with an average production rate of about 170,000 ounces over a 9-year life of mine. That we bought that, we're in the process of completing that acquisition. With the current share price, the acquisition price is about $55 million. And if we develop that project in a sort of single step, there's a funding need of about $250 million, which will fund through a combination of internal cash flows, debt, and new equity. But if the funding can't be obtained on acceptable terms, we'd simply fall back onto a phased approach, which would see us do a phase 1 project for say 70,000 ounces, and then follow up with a second phase to get it up to 170. And we could fund the whole of that first phase using internal cash flows, and then harvest the cash coming out of phase 1 to fund phase 2. So that puts us right back into the skill set and the experience that we gained at Blanket when we had no choice, but we had to just recycle the cash that we were making to reinvest for further growth, and that's what we can do if we have to. So we're by no means betting the farm and throwing ourselves onto the tender mercy of the market to fund this big project. If the funds aren't available on acceptable terms, that's it. We'll just paddle our own canoe as we have done previously.
Why is it in the face of adversity, Caledonia Mining proves time and time again that it is possible to operate a profitable dividend-paying company with growth in a jurisdiction as Zimbabwe?
I think the fundamental thing is that the asset, the Blanket asset, is a high-quality asset. Look, I mean, the average grade of Blanket is only about 3.5 grams a ton. So if you were to stumble over that resource today at 3.5 grams a ton with an underground mine that operates down to currently operating down to about 850 meters below surface, you would never be able to build that mine from scratch. and make money out of it. So we're very fortunate that the mine has been operating for nearly 100 years, and over that period of time has developed a very sophisticated infrastructure, which we've now just been able to enhance with recent investments over the past 5 or 6 years to set us up for future growth. So fundamentally, the asset and the infrastructure that we developed is high quality. I've already mentioned the quality of the workforce, which we think is second to none. And then we also benefit from the ability to get pretty much all of the consumables that we need for the mine. We purchase ourselves in Johannesburg, which has got a very sophisticated supply industry, both for product and for specialized skills as well. And we can get product and specialized skills up to the mine within about 24 hours if we need it. So all those things point to fundamental operating integrity. And then on top of that, where we've had to work very hard, but we're now very good at it, is just navigating the administrative and regulatory complexity of getting money into the country, getting money out of the country, getting stuff in, getting stuff out, people in, people out, which is, if you don't know how to do it, could become quite difficult. And I think the fundamental issue is that we've got this highly profitable cash generative business in Zimbabwe. If you're making money and you're profitable, it's just so much easier to operate there than if you're not making money and you're unprofitable. When we go and see the Reserve Bank and we take money out of the country, we're taking our money out of the country, money we've made, not money we've had to borrow or beg. We're taking our money out of the country. That's a very different perspective, I think, from just about every other Zimbabwe gold producer, which is unfortunately not profitable and not cash generative.
Those that are listening that may be looking to invest, what would you say to those investors if they were to look at investing in Caledonia Mining?
Well, it's not risk-free. You got to understand that, and the mining game isn't risk-free. Zimbabwe is not risk-free. Having said that, we're a long-established mine, and we think that Zimbabwe is sort of politically stable. You may not like the stability, but it's stable than many other African jurisdictions. So I think on a genuine assessment of risk profile, it is by no means as risky as I think people perceive it to be. Listed on AIM in London, where liquidity is disappointing. Also listed on the New York Stock Exchange, where liquidity is much better. And we've got growth. We think that we are a pretty unique combination of growth and yield. So our shares are currently on a yield of about 5%. But if once you've taken account of Blanket running at 80,000 ounces, the potential to build Bilboes up to 170,000 ounces, and then an unknown amount from Marley Green, sort of pencil in say 50,000-60,000 ounces. Once you factor in that growth opportunity with the yield, I think it is a very unusual investment proposition. Very unusual, very attractive, very exciting. Look, I'm a shareholder myself, and I'm very excited about the prospects for Caledonia Mining.
And lastly, as a conclusion, what is the outlook for the rest of the year going into 2023? And is there anything else that you would like to add to obviously give us more content to our listeners?
Yeah, I think what I expect to see for the balance of the year is production stabilizing at around 20,000 ounces a quarter. Won't be 20,000 ounces every quarter, sometimes more, sometimes less, but we're comfortable we can maintain 80,000 ounces a year. The cash position should start to improve quite strongly towards the end of the year and from early next year onwards, particularly one aspect of the Bilboes transaction that perhaps people may not understand is that whilst we're targeting a long-term very large sulfide deposit. In the short term, we think we've got about 3 years of really quite simple cash flows arising from a little oxide project, which could be quite lucrative in the short term. So I think what people should expect to see towards the end of this year and as we go into 2023 and onwards is quite significant improving cash balance, and we're beginning to make demonstrable progress on the growth opportunities. So it should, the growth should come into sharper focus, I think, as we go into next year and towards the end of next year.
Mark, really appreciate your time and give us an overview and an update on Caledonia Mining. And we'll obviously wish you well with the projects that you've got underway. And hopefully you can start to exceed 80,000 ounces going into obviously next year. If our audience wants to reach out to you, if they've got any questions, how can they go about doing that? Do you use social media at all? And if so, what platforms are you on?
Yeah, we do. We've got an investor relations lady called Camilla. If you go onto our website, you'll find information how to get hold of us. We are fairly accessible. If people send us questions, we pretty much try and respond as forthrightly as possible, you know, within subject to and within regulatory constraints. So that, yeah, so there's plenty of access information available on our website, caledoniamining.com.
Yeah. Appreciate your time. Maybe you might come on next year and give us an update. Obviously, you might even have other projects that you're going after. So perhaps you can come on sometime next year and give us an update. Yeah, thank you for listening. Hope you enjoyed that episode. Appreciate if you can share, like, and pass this episode on to others. Make them aware of obviously Caledonia Mining and also obviously the podcast if they're not already a subscriber to the podcast. So really appreciate your time. Thank you for your continued support. And until next time, happy mining.